DoorDash pricing its IPO above expectations. It's one of the biggest offerings this year, and we're expecting the first public trade in just a little bit. Deirdre Bosa will join us in just a moment with some of the key details of the offering. But before we do that, I want to talk specifically about the pricing. And for that, we're joined by Leslie Picker. Leslie.
Hey, Andrew. $102 per share makes DoorDash the second largest IPO of the year behind Snowflake. By pricing above a boosted range, the delivery platform was able to rake in $3.4 billion at a $39 billion valuation. The delivery company took a few unique steps throughout the IPO process. For one, it used a hybrid auction system to find the IPO price. Traditionally, there's a bit more of a back and forth in the sales process, but DoorDash automated this stage in the process and used the data from the auction to decide on that $102 per share figure. And DoorDash also took the extremely rare step, I've actually never seen this in my 8 years of covering IPOs, of not having a green shoe, which is the mechanism that can either stabilize the stock if it goes down or allow it to sell 15% more in proceeds. But DoorDash's CFO is a former banker at Goldman Sachs, wanted to put his own spin on things, I'm told. So we'll see whether these adjustments actually benefit the company when it starts trading in a few hours' time. But while marketing the stock to investors, DoorDash received greater than expected demand from investors who, I'm told, were drawn to the company's massive top-line growth, pockets of profitability, and #1 market share in online food delivery. But I'm told the top question from investors in pretty much every meeting was, what does this company look like in a post-COVID world? Over to you, Deirdre.
And that is consistent, Leslie, a question that keeps coming up. And keep in mind, as this company goes public, SoftBank had no small role in DoorDash's rise, which could represent its biggest win after a few notable flops. Now, the Vision Fund's nearly 25% stake in the company is worth $6.4 billion, with DoorDash pricing at $102 a share. Its first investment in the startup was only in 2018, so that is a more than ninefold return in about 2 years. Now, back then, the startup was valued at under $1 billion, and it was far behind Grubhub and Uber Eats in terms of that market share. But Masa-san's capital in food delivery, like in ride sharing, turned out to be a very powerful tool. The playbook used the money for heavy discounts and promotions to grab market share from rivals. Tony Xu, CEO of DoorDash, also differentiated his strategy from his rivals by focusing on the suburbs versus urban centers. Now, the company also used a controversial practice called non-partner delivery, where it essentially signed up tons of restaurants without even having any kind of contract with them. Now, today, seem to have worked out. DoorDash has about 50% of the food delivery market, and its pricing values the company at $39 billion on a fully diluted basis. And so far, this is also a much-needed win for the Vision Fund. But perhaps another key question going forward, and this ties into Leslie's question too, what happens if public markets want to see more financial discipline and capital is no longer that tool, or the weapon as some people call it, that it was when the company was private? Andrew, again, how sustainable is this kind of revenue growth and the kind of gains it's made in market share?
Well, the question I was going to ask both of you is just how competitive, when you really go market by market, what kind of, drag out fight there's going to be between the players that are still left. I know there's been consolidation in this space, but there's been so much discounting over the years, and what that ultimately is going to look like. We were talking to Sarat Sethi in the 6 o'clock hour. He said, at some point in a post-pandemic world, maybe some of these restaurants are going to say, you know what, we don't want you taking 30% anymore. We're not going to do that. We'll either do it ourselves or you're going to take less. It'll turn into a fight in the same way that people are trying to fight Apple and what the people call the Apple tax. What do you think of that? Deirdre?
Well, I'll connect what you just said in terms of commissions to regulations. We didn't talk about that in my head, but that is an important point that investors are looking at going forward. Of course, DoorDash won a really important battle in California with the gig workers bill, AB5, or the law that is, and that ballot initiative. But going forward, there is that question of commissions. And Andrew, it's a good question because at a time when restaurants are struggling to survive and they're paying, a certain amount to not just DoorDash, but Uber Eats and Grubhubs, this is going to be a really important issue going forward. And you're right, once we're past the pandemic, do they want to continue doing that? And as Leslie touched on, are people even going to be ordering in food as often, but DoorDash is in an interesting position being in the suburbs because those delivery sizes, the purse sizes are a lot bigger.
Shepard Smith here. Thanks for watching CNBC on YouTube.